You're listening to an unconventional finance interview with your host, Elijah Johnson. Find us on the web at unconventionalfin.com.
Today we have a returning guest. His name is David Morgan, and he's the founder of silver-investor.com. Thanks for being on again, David.
It's my pleasure. Thank you.
So, David, could you give us your take on what's been happening to the precious metal market since the last time we talked to you, which was about 2 months ago?
Well, I think we're still in a long consolidation period, but I really think that the equities have bottomed. And I also believe that the metals themselves have probably bottomed. The main support levels for gold are around the 1550 level, 1,550. And it's maintained that level on a few tests, or more than a few. And as far as silver is concerned, it's a little tougher because there isn't really a well-defined support level, but there's been about 4 spike lows into the 26 level. The last one being the lowest, which is 2610, and that's basis the spot market. And it held that and came up. It didn't come up strongly on that test. It stayed in the low range, which shows weakness, but that's one day, and one day doesn't make a market. Since then, we've been over 27 and remained there for quite some time on a relative basis. I think that, again, that the metals bottom is probably here, but those are the two levels to watch. If you see a break below the 1550 level in gold, and it remains there for like 3 days in a row, then that's suggesting strongly that we're going lower. And the $26 basically for silver, same thing.
Well, we'll definitely see what happens, and lower prices are always a buying opportunity. But I wanted to ask you now, you said in a different interview that you were in Hong Kong recently at a conference, and you said that many banks, including the biggest bank in Asia, are actually suggesting buying physical assets such as gold and silver. Am I right about that?
Yeah, well, let me just correct a couple things, but you're basically correct. One is it was a bank-sponsored event. It was only one bank, and that's Standard Chartered Bank, and that's the largest bank in Asia. And the main theme of the conference was that resources is the place to be. All resources. They had representations from not only precious metals and base metals, but they had energy, they had coal, oil, of course, natural gas, even some of the agricultures. And so the idea was, although it wasn't in the printed material, was that this is what the world needs. They need resources. Here's a plethora of different type of resources presented by all kinds of different commentary, and mainly by different companies. And pay attention. This is where we are going to continue to build our wealth. That was the overall theme. As far as gold and silver specific, there was a lot of talk about the precious metals. Rob McEwen, who's one of the stalwarts in the industry, was the dinner speaker, and he did a great speech on gold. Talked about his target being at least $5,000 an ounce. The next day, some people asked me if I thought that was realistic or not, and I thought, yeah, absolutely it is. So the specific gold and silver, I wouldn't say was a specific recommendation of the bank, but when I gave my speech, which was silver, hyperinflation, and the demise of America, which I covered those 3 topics. When I got done, they left questions and answers open, and the gentleman asked me if I thought it would be a good idea for the Hong Kong dollar to be silver-backed. And of course, me being me, I said, certainly I would like to see that, but of course I think that'd be more of a pipe dream than a reality. So it wasn't specific, but it was very much something important. I want to add one thing, because they did do a little survey after every speech, and I was watching not all of them, but I saw several, and I was on 3 panels or so. So I got to see the voting, and it was very obvious to me from the voting that this community, this Asian community in Hong Kong, very much looks at gold as an asset class that preserves wealth. They get the gold story. They don't get the silver story from what I saw as voting, because the questions were very specific, and it was very obvious that gold is revered by this group, but silver is something that they probably don't understand that well, at least in my opinion.
Okay, so I guess, how do you see this Asian demand affecting the metals prices?
I think it'll affect, obviously, the price of everything because of the commodities boom. And, 1 out of every 5 people on the planet is Chinese. and as they increase their wish to become, have higher lifestyle, eat better, have better shelter, have, the modern conveniences that we take for granted in the West, you're going to have a big demand on all commodities, and then specifically gold and silver, or silver particularly, is huge. And the reason being is that the more advanced a society becomes, the more technologically advanced, the more silver is used on a per capita basis. In other words, on a per person basis, the amount of silver that's used that no one thinks about but has to be in place. All the electrical grid needs it. Anything that's electrical or electronic, any iPad, any iPhone, any laptop computer, the computer keyboard, any membrane switch. Every switch that you see these days is a membrane switch, like on a microwave oven, for example, or any touchpad of any type. That's a membrane switch that uses silver. So as China and India and these other countries continue to improve, they're going to have more and more demand on silver, not necessarily as an investment, just as a way of life. So that's huge, because there's a huge unpent demand that exists. If you go back 12, 20 years, the amount of usage of silver on a per capita basis in China was 1/70th the amount that's used in the West. That's increased about fivefold right now. So they're not nearly at the level that we are in the West, but they have increased substantially from where they were. If you go back about 10 years ago, China was exporting about 100 million ounces of silver on an annual basis. Today, they import about 100 million ounces of silver on an annual basis, and I think that's going to continue. Even with the recession, certainly could slow down demand somewhat, but the overall trend, I think, is still in place. I think it will grow stronger. And then you have to add on top of that what the potential is as silver being an investment class in China. And it is becoming more and more popular. I think that there's more and more awareness of what's going on among the new middle class in China. And also in India, of course. India has always been a big proponent of owning gold and silver. So I think there's nothing really but upside, not to say that, we won't back and forth and wallow around and maybe have to consolidate longer and, all markets move up and down. But I am very, very opinionated that the overall trend is intact and will grow stronger.
So do you think the rest of the world will kind of follow Asia's example of investing in the precious metal sector?
That's a great question. I think the Chinese are probably lagging what the savvy investors are doing in the United States, Canada, and Europe. In other words, the amount of silver investment in China is really rather ridiculously small relative to what it can be. And silver investing, only became popular in North America. I mean, the United States actually has probably more silver investment than any place else. Canada does a pretty good job as well. Europe, outside of Germany, really doesn't get the silver story. I mean, some of the fund managers I deal with obviously love silver and have great investments in it, and I can name specifics, and I won't. So I don't want to paint too broad a brush take on my opinion on this, but I would say China's coming into the party late, but I think that's good, because there is so many people, there's so much money, and the ability to hold an asset class that has proven itself to weather any financial storm are both gold and silver. And because of that fact and the amount of demand that potentially exists in China, I think you could see price levels that most people would find ridiculous if I named them right now. So I'm really, again, bullish, but I would just restate it slightly that they would be following us more than us following them.
So in your work, you've talked a lot about supply shortages in silver due to industry and industrial demand. How do you think industry will acquire the silver needed when the supply shortage hits?
Excellent question. I've thought about it a great deal, and here's my answer. Most of the industry that uses silver belong to the Silver Users Association. As Ted Butler has pointed out, and I have reiterated, there isn't any other commodity on the planet that has a users association. You can check out the website and form your own opinion. Mine is that this network of users is coupled with a direct line into pure silver, which usually comes from either a mine or more directly from a smelter. And they have contracts in place for their physical needs. So for an example, you might have a big electronics firm out of Asia that needs silver for manufacturing electronics like iPhones and iPads and that type of thing. And they know they need so much silver on a daily basis, on a monthly and an annual basis. They basically have a contract in place. They're a member of the Silver Users Association. They're basically in bed with the direct source. So there's actually, in my view, now you're not going to hear this from maybe other analysts, but it's true. So there are industries that have a direct line to the silver that they need. And they really, if the contract holds, in other words, there aren't mine disruptions or whatever, they're actually in pretty good shape. But I want to add, and this is very important, that almost all of those entities that are members of the Silver Association, like DuPont and Dow Chemical and Mitsubishi, and it goes on, they still look at it on a just-in-time inventory basis. In other words, they really don't warehouse too much. Yeah, they do have to warehouse it. I mean, they don't want to be on a manufacturing line and get a big order and not be able to fill the order because they don't have any silver to put into the product, but they don't warehouse much. So it's always at the margin, as you're alluding to in your question. So what could happen is a new manufacturer gets a large order and can't get the demand, or someone decides, you know what, we've been running really, really tight on our silver supply. In fact, we had to shut down the line for 4 days last month because so we're going to order more silver. Or the market price gets too high, and one of the COOs, chief operating officers, decides, I think we really should just we've got this contract for silver, whatever. There's so many variables. I don't want to go on and on, but the point being is there could be a tipping point where, for any number of given reasons, silver's demand for industry alone increases substantially. Once that starts, I think you'd have kind of a feeding frenzy. One would play on the other. Dow Chemical will go, oh my goodness, they're stockpiling silver. DuPont says we better get some more too. Or the smelter says, our contract's in place. However, we're not able to get it because of the grades are bad, or we had to shut down, or whatever. So there's so many variables here. So I do think that certainly it could be significant. It could be almost instantaneous, and it's something that I don't think very many silver users are even planning for. These guys, in my opinion, are kind of the old expression, fat, dumb, and happy. They see themselves as kind of fat cats, and everything's in place, and their worldview is different than mine, and everything is humming along just fine. Then if you add on top of that what the investment demand would be because silver had a breakout, or all of a sudden it's in the mainstream media, or maybe even not in the mainstream media, but the internet has a good take on the fact that you can't get silver in time for such and such a process or such and such a large manufacturer. Then I think, since it's such a small market, you could see a huge run into the silver market, which makes the situation even worse. And that's the problem that these potentially exists, is that, again, once it starts, I think it could be that spark that ignites into a flame, that ignites into a big fire very, very rapidly. And once that happens, watch out, because you could see a price explosion. Is this going to happen? Don't know. Could it happen? Absolutely. When? Well, that's more difficult to say. The best thing for a manufacturer to do is basically to warehouse it ahead of time. And some, I'm sure, probably are, but I couldn't give you any specific cases.
So talking about this price explosion in the price of silver, Bill Murphy and others are looking for huge price moves to the upside in August. Do you think that's possible?
Well, it's possible. For the record, August is seasonality, which is usually the lowest price for gold on an annual basis. In other words, the best time to buy gold most of the time, silver too, is in August. But the seasonalities haven't worked the last couple of years, so I pay attention to them. Obviously, I wouldn't even made the statement. But what I do, I think the market is much tighter in silver and gold than most people do. And I do believe the bottom is probably being formed now or behind us, but time will tell. It could be wrong. And I do see higher prices by the end of the year. And silver is such a tight market, and with Sprott Asset Management just putting $200 million into the physical silver market here recently, we really haven't been able to digest that yet to determine what kind of price pressure that's put on the physical market. Because although the contracts are in place, the silver has yet to be delivered in total. And last time that type of a purchase was made, it moved the price of silver up about $2.50. So I'm waiting to see what the, again, price movement will be because of that purchase. I also know the market's extremely tight, as I just said. In August, certainly, it could be in August. There's so many things that are happening in the world, as you know, that we can look at, one day being a huge change. I mean, I just want to digress here and just make a statement. The financial markets in the world in general, but particularly financial markets, there are things that happen within any given week now that you wouldn't have seen in probably 6 months if you go back like 3 decades. I mean, I've been in the financial markets most of my entire life. And the amount of news and events and concerns and banking problems and big problems that we see coming at us almost weekly. I mean, these type of events, these would be, something that occurred so rarely. And now we're just bombarded with this. It's as if everything is accelerating. So, keeping that in mind and being in the real world, this is just observation on my part. You have to look at it as if you need to be prepared. And that's what I try to stress, because I know there are people that are in this market that probably got in the 30s or whatever, 40s, and they're frustrated. But it's just a situation where you've got to understand what's happening. You've got to be objective as you possibly can, not let your emotions run you, and remember what your convictions are. Remember, why you're in this market.
But so what do you say to people who bought silver in the high 30s and 40s and think that the top is in and just want to sell out?
Well, first of all, I'm sincere enough to say that it's a possibility that the top is in. I just doubt it with all that I've studied, all of my work, all that I know about monetary history and what I carefully observe with what the central banks are doing on a global basis. For me to say with any conviction that the top is in, I just don't believe it. I don't believe it's even close. However, the market is the market, and if I bought, and by the way, I have bought it in I bought from 33 all the way down to here. I've done very, very good at picking the tops all the way up. I've done okay at picking the bottoms. The bottoms for me are tougher to pick than tops, but I knew that we were low. I said to everyone that's a member, and I've done it in the public afterwards, that anything under 30 is a good buy. I actually bought a little bit at 33. I bought most of the rest of the physical that I've purchased over the last several months under 30. And I would say to them, one, review why you bought the metals in the first place. That's step one. You didn't buy, and there's variable reasons. There's people that do it for various reasons. So look at why you bought the metals in the first place. Secondly, you can use, my work, my opinion, and others to determine where you think the future is going. Basically, we have never been in a situation on a global basis that is so untenable. There's never in world history been a situation where having a debt problem where you have too much debt, you can borrow your way out of it, which is basically what's taking place. In other words, when the Federal Reserve infuses the economy with these QEs or Operation Twist or flooding the markets with money, that's borrowed money. So if you were highly in debt and you saw no way out, would you borrow more money? First of all, in a sane society, you wouldn't be able to borrow more. You're not credit worthy. But yet the creditor isn't really the government. The creditor is the people of that government. So if the people are totally broke on a general basis and they can't pay off the debt they already owe, and they're burdened with even more debt, you can see where I'm going with this. It's absolutely impossible. It's never taken place in world history. So to think that this time it's going to work is preposterous. So now what you have to ask yourself is, what could I own that is outside of this debt paradigm? And the only thing that's ever stood the test of time is money that exists outside of the banking establishment. And that is gold and silver. And that has always worked. if you look back at the Weimar Republic in 1923, what you'll find is that commodity prices generally went up, stock prices generally went up, food, of course, anything tangible went up. But what really accelerated and really kept pace, or actually outpaced, that hyperinflation was the metals. And that, I think, is the situation at hand. If you go back and look at the last 10 years of a silver chart or the last 10 years of a gold chart, what you'll find is you have made real gains. You've made inflation-adjusted gains in real purchasing power that have helped you to actually not only preserve the wealth that you've had or the savings that you have, but it's actually increased in purchasing power. And that's, I think, the point that some people miss. Certainly, this time around, it's my strong opinion that it's not going to be like the 1980s market, where you get this huge spike and you can cash out and go into the long bond and life is great for the next 30 years. I think this time there's going to be so many disruptions that we're not going to come back to any normalized basis, because the financial markets are being less and less trusted all the time. And so it is possible this time that you may actually be using, physical silver for some purchases. I don't really want to forecast that, but we're much more likely for that to take place this time than we were in 1980. And the only reason I say that with conviction is because, again, there's so many disruptions throughout the banking sector, and there's so much distrust among the entire financial system that so many people are going to, money in the mattress, literally money in the mattress. And the best money you can have in a mattress, of course, is real money, and that's, again, gold and silver.
Well, terrific. So our viewers can go to silver-investor.com if they want to find out more. And is there anything else you'd like to add, David?
Yeah, I would. Thank you. I have a Twitter account, and since I switched to Web 2.0 and changed the website to be a little more, user-friendly, my Twitter account is SilverGuru22. Or you can just probably type in my name in silver and add the word Twitter in Google and find it. But it's SilverGuru22. What I do, me or one of my staff, is every day except the weekends, we put up links on, interviews like this. That's one thing we do. But we also put up stuff that we read that we think is extremely important. And we filter through a lot of news on a daily basis. Sometimes it involves the metals. Often it does. Sometimes it's just a general news story that we think it's important for people to read. So that's one way to kind of get into our heads for free. And, follow us on Twitter if you care to. You don't certainly have to read everything. We try to keep it very simple. Try to do about 3 articles a day and no more than that, but sometimes it's more, sometimes it's less, sometimes it's none. Point being is that this is, stuff to follow our thinking and the reasons why we say what we say and do what we do. I also have a YouTube account, and that's Silver Guru. And over the last 2 years, Elijah, what I've been doing is not writing in the public domain much at all. I find the videos to be much more powerful and much more important, I guess, than the articles. The thing about writing an article is it's very time consuming. I can talk much faster than I can write. I can get much more information on a video in 10 minutes than I can the amount of time it would take to write something that I can speak in 10 minutes. And also what happens if you put the right titles on these videos is someone that's new to the market or wants to review something will actually play a video that's 2 years old or 3 years old or 6 months old. But in the written format, for whatever reason, I might write the most timeless piece on the silver market that ever existed. And please check my ego on that. I'm just giving this as an example. But you write a very good article, and once it's a week old, people don't want to read it. It's like, well, that's a week old. Why would I read that now? Whereas on a video format, they'll go back and say, why silver is important for every American, or why silver is important for anyone on the globe, or, whatever the title be. So I find it to be much more useful to do videos. They are, there's a little more involved as far as the production of them go, but YouTube quality, and I have nothing against YouTube, I love it. And that's what makes it so beautiful, is it's not like it has to be a big production like when I did The Matrix. That was a formal, choreographed, planned out 3-hour extravaganza to make that, 3-minute video, but I wanted it that quality. But most of the videos are just kind of well thought out, but not nearly that time consuming. And I really like that format. So if you want to give me some feedback on the YouTube channel, go ahead. You want to give some feedback on the Twitter channel, go ahead. We do provide a free e-letter every Saturday. We do some advertising on that. I mean, all this stuff costs me money. And of course, I make my living by, paying everybody that works with us to do research. It's a combination of people. It's not just me anymore. It's been that way for years. And we do have 3 levels of paid service, which you can check out on the right side of the website. But if you just want the free stuff, YouTube, Twitter, and get on our free email list at themorganreport.com, and you'll get the 10 rules of silver investing if you're brand new. If you're not, you will get our weekly updates.
Awesome. So thanks again for being here, David.
My pleasure. Thank you.
For more interviews and financial insight, go to unconventionalfin.com.